The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to this Friday edition of Squawk Box. Arabile Ghamidi and myself, Steve Sedgwick, are your hosts, and these are your headlines. President Biden defying calls from Democratic lawmakers to step down from the top of the ticket, even as he makes a string of flubs during a closely watched press conference.
I think I'm the most qualified person to run for president. I beat him once, and I will beat him again.
The S&P 500 and the Nasdaq pulling back from record highs, with big tech coming under a bit of pressure. Look at the board on the screen. Look away from your toothpaste. Yes, that's it. Look at the screen. That's right. Coming under pressure as US inflation data actually shows the weakest monthly reading in more than 4 years.
Well, Tesla shares diving after a report of yet another delay to its robo-taxi program, wiping out some of the gains after a stunning 11-day run-up. And yen volatility, traders on intervention watch after a sudden surge in the Japanese currency overnight, while the Nikkei 225 slumps from record levels.
Apple's Vision Pro goes on sale in more countries beyond the US and Asia today, with customers here in central London able to buy the kit if they're willing to drop a cool $3,500.
Good morning, Arabile Ghamidi. How are you?
Steve. Yeah, thank you so much. I'm all good. Welcome back.
Gotta say, of all the assignments I've been sent on, and this is a shout out to the head of TV News, I love Washington, D.C.
Yeah.
I've never been before, and which is extraordinary for a man of, I'm in my mid-40s.
Incredible, actually. Wow.
And a little bit
Is that what you just said?
Yeah, a little bit of change. Yeah, that was my flop. But I absolutely love Washington for every reason possible. I thought it was I think that it was brilliant. Everything about it, and it's just, and obviously it is the centre of two enormous stories at the moment. So I was privileged to be there at a time when everyone's focusing on the presidential election and focusing on NATO as well. So absolutely phenomenal trip as well. And I believe that, the old adage, you can't teach an old dog new tricks. I feel I learned quite a lot when I was out there as well. I was a sponge of information everywhere I went. And I had managed to have lunch with an old friend who, actually a former CNBC anchor, and she filled me in a lot of what's going on in the swamp. And it was just absolutely fantastic. Just
very quickly, between Vilnius and Washington, D.C., I mean, how stark is the difference, if any? And the commitment.
Well, one's a small city in the Baltics, and the other one is the capital of the United States, which was formed out of a swamp, actually, and it took over 20 years to drain and build. Not between
the cities, Steve, but really between just the NATO meeting itself, the commitment to Ukraine, the conversations around how firm a stance.
Yeah, look, absolutely. Gosh, that's an enormous question. One thing I will say, which I keep hearing from NATO, which I don't think they mean, is this war can be over very quickly, or we can win this war, or actually the path to ascendancy for the Ukrainians is very, very clear. I'm not a politician. I'm an amateur analyst in many ways of what they are doing, but there is a cognitive dissonance between what they say and what they actually mean. There is a huge difference between what is practical. For instance, I had one and we will move on because we've got some very big stories. Big difference between them saying, yes, the path to ascendancy for Ukraine into NATO is very, very clear and irreversible. And it's the same with what we hear from the EU as well about the path there. I think that it is what politicians have to say. It's what Mr. Zelensky and Ukrainians want to hear. It is the right kind of, dare I say it, propaganda. But the path to the EU membership, the path to NATO membership, and again, I'm not being off message, I think, but the fact of the matter is I see it as tortuous, I see it as stunningly difficult, and I see it nowhere near the short to medium term as well. Politicians can say it as much as they like, but the truth of the matter is we are light years away at the moment for all kinds of reasons. Even when the war ends,
Yeah, it's
and
still
we
gonna
don't
be
know when
difficult.
that war will end.
Exactly.
I saw nothing at NATO that says this war can end. And yet you won't hear that from the world leaders because they say we're going to give the tools to Mr. Zelensky to end this. And again, I don't wish to be off message with the West, but I'm being highly critical of what I heard compared to the actual reality, which they know because they are military experts.
Needing to taper down a little bit of those promises.
We need to move on, and thank you for the question, because it's two enormous stories going on, both of which I'm going to get Carl Weinberg ready on this one as well. So President Biden. He insists he is the most qualified person to run for the presidency against Donald Trump, saying he won't step aside unless polls show there's resolutely no way he can win, which may be too late, mightn't it? Speaking at a highly anticipated press conference that drew the curtain on the NATO summit, Mr. Biden aimed to address concerns over his age and health as more Democrats call on him to step aside. Well, he defended his track record and said he's determined to see through the rest of his economic plan.
I'm not in this for my legacy. I'm in this to complete the job I started. As you recall, understandably, many of you and many economists thought my initial initiatives that I put forward, can't do that, it's going to cause inflation, things are going to skyrocket, the debt's going to go up. What are you hearing now from mainstream economists? 16 economic Nobel laureates said I've done a hell of a job. That under my plans so far and what's going to happen in the future if I'm reelected, that things are going to get much better. Our economy is growing.
But the president did make a noteworthy gaffe during the press conference, mixing up his Vice President Kamala Harris with Donald Trump, just hours after he referred to Ukraine's Volodymyr Zelensky as Vladimir Putin.
Look, I wouldn't have picked Vice President Trump to be vice president, that I think she was not qualified to be president. Ladies and gentlemen, President Putin. President Putin. You can beat President Putin. President Zelensky. I'm so focused on beating Putin, we got to worry about it. Anyway, Mr. President. I'm better. You are a hell of a lot better.
And for more on Biden's press conference and reaction out of this week's NATO summit in Washington, D.C., head to CNBC.com. Look, I'll tell you what I'll do. Carl Weinberg's with us. Carl, great to speak to you, Chief Economist at High Frequency Economics. Carl, what we'll do is I've decided to rip up the team's rundown, bless them, and we'll talk about the economics and CPI in a few moments' time, and we'll get some reads into that. But I want to ask you about the states, I've just come back from Washington. It was absolutely fantastic to be there as well. You, of course, are in the New York area as well. Carl, for the Democrats now, and the likes of George Clooney and the likes of people like Gideon Stein, who is making comments, and Disney and other Democrats, to them to be going through this now, I just find quite extraordinary. They have known what the president has been like for years. They have had years for this opportunity to change the team at the top if they want to. Why do you think they are making all these protestations and these questions about his performance now, when we all know, anyone who's been around looking at live performances from the president, and I've seen quite a few, from Warsaw to Bari to DC, why do you think they're leaving it so late now?
Steve, good morning. Good to be here. Not so good to be having to answer that question. It's hard to explain exactly how we got to where we are. Clearly, the president's performance disappointed people. It hasn't been apparent to a lot of people what his condition is, and it's still not totally apparent or knowledgeable to people what his condition is. The man's under a lot of pressure. Democrats right now are going through an introspection. Better to do it now, before the convention, than after the convention or closer to the elections. And I have no idea, I have no prediction as to how this is going to work out. We've never seen anything like this before. It's a great question. It's the right question that you just put on the table, but I don't think I have an answer for it.
And Carl, when I hear, there is a horrible truth from my point of view of having seen the president and seen him on the box like a lot of people and seen him live in person. This comment that's the philanthropist Gideon Stein, he's holding back some money apparently until they see what's going on in the leadership. Quoted in the FT, unscripted appearances instill terror in just almost everyone I've talked to as well. And I understand that comment as well. And I understand why there are concerns. But why do you, again, I'm asking you the same question in a different way because I'm bemused. Why haven't they built up Gavin Newsom? Why haven't they built up Gretchen Whitmer or Pritzker or Kamala Harris as well? I saw Rachel Maddow, our colleague at MSNBC, almost pleading with the vice presidential team, saying, why do you only give us very, very short interviews with Kamala Harris? She is a very competent performer on the wider stage. If they didn't think she was up to it, why didn't they build a second or another alternative to the president to go up against Donald Trump?
Again, all good questions, Steve. Sometimes political systems yield unpredictable results, even good political systems. It's a credit to American democracy that the question can even be asked. If people in Russia started questioning Putin's standard of mental health, they'd find themselves in prison. So it's part of a democratic process, but it's also part of a political system that generates things like the Liz Truss short prime minister role in the UK, things like Macron's election in France. There are lots of times when the political system just goes off the rails. And this is a moment when it has gone off the rails in the sense that there are doubts about the candidate, and we're still trying to figure out and assess whether they're justified or not. But, you know, it's the system working. It's the system doing its thing. What we're all hoping is that in the end, we end up with a good president, whether it's Biden or, I'll say it, or Trump, or someone who's not in the race yet, whether Biden leaves and throws his support to somebody else, whether a battle evolves in a vacuum if Biden were to leave. These are all questions that have no answers right now because we're really in uncharted territory. But it's a system and it's doing its job. It's making a choice. And we just have to watch it play out.
I hear you, Carl. And by the way, that was almost, if I'd been a stunningly patriotic Brit, that was a mortal wound comeback when you mentioned trust. You raised my Biden, which I took your bishop and you took my queen, or you knocked over my king or something straight away. Carl, we'll come back to you in a few moments' time. We've actually got you here to talk about the economics as well, and you and I have had some fantastic rows over the years about that, but I think we might even be on the same page. You never know. Moving on, CPI, consumer prices unexpectedly fell in June, providing further impetus for the Federal Reserve to start cutting interest rates. Consumer price. This is what everyone gets excited about. Here we go. Consumer prices dipped. Well, what did they dip, everybody? Yes, you can see it on the screen. 0.1% compared with May. Yeah, let's get excited. Let's have the best rally ever for the Russell 2K. Not quite the best ever, but pretty strong. Anyway, that was the weakest monthly reading since May 2020. Year-over-year rise is now 3%. It's the lowest in a year. I hate to say it, it's still a whole percentage point higher than what we're aiming for. Just saying. Core CPI, which excludes volatile food and energy prices, rose 3.3%. That is more than 2%, by the way. The smallest annual rise since April 2021. And breaking it down by key categories, gasoline prices saw the biggest decline, falling 3.8% on the month and 2.5% on the year. There's also been a pullback at grocery store food. Home prices rose just 1.1% compared with last year. Meanwhile, used vehicle prices fell 1.5% on the month and were down more than 10% from a year ago. Our US colleague spoke with the IBM Vice Chair, Gary Cohn, and asked what he thought the Fed's next move would be.
Clearly, the trend right now is very friendly to the Fed and the Fed's desire to cut interest rates. And I think if you take Chairman Powell's testimony earlier this week, that he clearly does not want to be late to cutting rates, as we all accused him of being late for raising rates. When we saw inflation rear its head, they were trying to dismiss it as transitory. I think on the way down, the Fed is going to be very sensitive about getting in front of cuts and not being late.
So it's certainly about that movement and certainly about what exactly is the next move then from the Fed. The market is pretty much now priced in a 90% chance of getting an interest rate cut happening in September. But you can't cry victory yet on that inflation print. As Steve just noted, 3% is still the mark. That is 1 percentage point away then from where the Fed would like it. So even if you begin to cut in September and maybe get another one then later on in the year, still kind of need to remain in somewhat of a restrictive territory in order to ease things back. And perhaps then you saw investors and take things out, take their investments out just a little bit then out of the big tech players that they have been in for some time now, perhaps moved a little bit more into the other stuff, including the small caps as well. And that's why you're seeing the Russell 2K actually managing to move higher as well than yesterday. I mean, it's only up 4.8% on the year, though. So that will be interesting whether that continues to ramp up then. We did see losses, however, for the S&P 500 and the Nasdaq. Finally, a relief from those record trades that we had seen across the rest of this week. Then on a weekly basis, the Dow's also beating out the other majors. In fact, then by sectors, 7 of the 11 sectors are actually positive this week, led by, wait for it, real estate, 3.6% higher actually. So that is interesting to look at. We'll unpack it a little bit more as well throughout the show. But as I said, big tech has been the one that has led the market higher. As you can see now, yesterday, down it went. But significantly, there was a bigger fall then for Tesla. And that does follow through then from just that, not just yesterday, of how they're going to delay, unfortunately, their robo-taxi prototype display then. And it was the big event that perhaps had ramped up that share price over the last couple of years. In fact, Tesla, let's remember, that stock price had actually gone down 43% to its lowest of around 142, now sitting at 241. So it has moved significantly higher, around 70% then at this stage. But that fall is of 8% then. Does it mean that the robo-taxis are the ones that really are important for this valuation? We'll certainly see. Now onto the Treasuries picture then as well. The Treasuries tumbled yesterday after that inflation data came out stateside, then renewed confidence of rate cuts still coming into the market. Most rates slid to their lowest since March, in fact, with the 2-year actually sliding as much as 13 basis points. 4.522 is where we're sitting right now on the more rate-sensitive note there. The 10-year note sitting at 4.212, or rather 217, should I say then, at this time. Odds of a September rate cut, as I said, jumping from 70%, now sitting at around 90%. Onto your dollar crosses here then. And I specifically actually want to focus a little bit more on the yen as it moved below that 160 mark. 161, in fact, is the mark we had seen it at just 24 hours ago then, and back down to 159 is where it is right now then. Question marks around whether there had been suspected intervention again. I'm not necessarily hearing much by way of confirmation of that, of course, out of Japan then, but could there have been a prop up in that currency? Of course, seeing it drop down then to that 159 mark, following on from the CPI print that we saw stateside. You had seen those drastic moves then come through for the yen. All of this in the wake of that cooler than expected inflation print. So what does that mean for the Asian market? Well, bit of a mixed trade so far. You're seeing the Nikkei actually fall off more than 2% then, 2.3% actually, is where you're seeing the Nikkei then this morning. Moves in the yen did necessarily steal some of the spotlight in this front. But let's remember that the Nikkei had actually moved to record territory earlier this week then, and now that's taken a bit of a slump now. The Hang Seng, though, managing to move higher, 2.1%. Still some of the tech players actually still losing out, much the same as you saw stateside. Speaking of stateside, Carl Weinberg still joining us, chief economist at High Frequency Economics. Carl, it's very interesting because that inflation print then, to many, just says, well, September is dead to rights. It's definitely happening. Is that the case?
Well, not to listen to the Fed chair. It's certainly not locked in, and it's certainly the most likely date as it seems right now. But of course, things can change between now and then. The Fed chair was very clear in his testimony this week in what he said in Sintra that inflation metrics and the economy in general are moving in the way that we kind of like, and that says that, well, they're okay with retracting some of the restraint that's in the current policy setting. But, all right, he said, well, we're at 4% unemployment, roughly. Inflation is at 2%, roughly. The economy is growing at potential, roughly. He says, that's kind of like we want to see. That's one thing you can say. But he also implied, well, why would we want to change anything if the economy is at full employment with inflation where we want it to be and it's growing nicely? Why would we want to tinker with what we have right now? Why would you want to cut rates under those circumstances? So there's this cloud hanging over the September meeting. There certainly is noise, buzz, and data to support a rate cut at that meeting, but there also is a cloud hanging over that decision. Why would you tinker with it if it's not broken?
And I suppose the big question mark is that because they missed out a little bit on the hiking cycle, they worry whether they would have been able to navigate the cutting cycle correctly. Is that soft landing rhetoric still in place?
Well, I think the best advice anybody can give markets, whether they're currency markets or the bond markets or the stock markets, is don't bet against the Fed. And the message from the Fed has been that, yeah, they see that they're going to have to cut rates. They're going to have to cut rates. And Powell started talking about this, again, both in Sintra and his testimony this week, because as inflation falls, real interest rates will get higher, and they don't want to cause a recession. They don't want to see the unemployment rate go up. So the next move is going to be down. The Fed's telling us that that's the right bet. The actual timing of it, imprecise. And again, listen to the Fed. Don't put all of your money on the notion that the Fed's going to do something that they haven't told us they're going to do, or that they're not going to do something that they have told us they're going to do.
Carl, you mentioned the stock market there. Very often it is the tail that ends up wagging the dog because it has one of its great hissy fits as well. We just showed a chart of the Nasdaq, which is, all right, it wasn't particularly dynamic in the last 24 hours, but my goodness me, it's had a run as well. Do you think actually, and again, you are an economics expert rather than a stock market expert, but you have to look at the both as well. Do you think we're in dangerous ground actually where these markets, if we do have a higher cost of financing for too long as we look towards 2025, where people are talking about a lot of refinancing across the globe, whether it be governments, whether it be corporations, whether it be individuals, are we on the precipice here of something that could be quite dramatic?
Well, there's nothing in the economics that signals that the economy is on the precipice of a deep recession or of a sudden turn of events. But then again, we very rarely see it coming, even though we've never seen a boom that hasn't been followed by a bust. All right, we've never seen a recession that hasn't been followed by a recovery. But in the first instance, all right, at some point the stock market rally will end. It's inevitable. But right now, there's nothing immediately on the horizon to suggest that the economy is going to remove its support for strong equity markets. We look at the initial claim numbers, and yeah, they're up a little bit, but the general level of claims, despite the increase, is at the same place where it was in 1968. We look at the employment numbers, and they're flat as a board, a little bit above 200,000 a month in new jobs created, and that's nothing like what we see in a recession or in the run-up to a recession ever. And all the surveys we look at and so on tell us the economy is still chugging forward. So, yeah, we're going to get a recession. It's going to come sometime soon, but we don't know when, and we probably won't see it coming when it does, but when it does come, it will happen really, really fast. That's the lesson of history, the lesson of the last half dozen downturns that we've seen. But for right now, in terms of all the data that we see, there's no recession immediately in sight.
Yeah, 1968, September 1968, 5.375. Now, virtually the same interest rates. Amazing, isn't it? Carl, lovely to see you. Thank you very much indeed. I won't ask you what you were doing in 1968. You're probably just enjoying the flower power of it all.
I had a ponytail.
Did you really?
I did. I'm not allowed to discuss what I was doing in politics at that time.
No, it'd be very nice if you could bring us a little picture next time. We'll have a look at you. Carl Weinberg with the ponytail, circa 1968. Good man. I'll see you soon, Carl. Carl Weinberg, Chief Economist, High Frequency Economics. I wasn't around in 1968, just in case you're about to say something rude.
I was 20 years from being around.
I'm just about a child of the 70s, all I can say.
Just about. All right. Fair enough. I thought you said mid-40s earlier.
Come on, carry on.
Coming up on the show, Apple's Vision Pro launches in the UK, France, as well as in Germany. We're in London to check out the headset and meet some of the first UK customers. Plus, US banks get to kick off the second quarter's earnings season. We'll dig into what to expect. And we'll get a perspective on the Chinese economy after mixed trade data with CMR Managing Director Sean Wren. That interview is coming up at 7:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
Now, Tesla shares slid 8% after the electric vehicle company reported delaying the unveiling of its highly anticipated robo-taxi by 2 months. That's to give teams more time to build prototypes. That's according to Bloomberg. Tesla's stock slumped followed an 11-day rally that delivered a more than 30% surge in its stock price, driven by better than expected deliveries for the second quarter. And Apple will let rivals use its tap-and-go payment system. That's after EU antitrust regulators reached a deal with the tech giant to end a 4-year investigation. It comes as antitrust chief Margareta Vestager warns that Apple has yet to change its broader practices to comply with the bloc's Digital Markets Act. Apple is currently facing 3 investigations under the act, including its App Store practices. And Apple's Vision Pro mixed reality headset hits the UK market today. It's got off to a lackluster start in the US, where it retails for $3,500, with analysts expecting sales in the current quarter to plunge 75% on the previous 3 months. Arjun is at Apple's flagship London store then. That's on Regent Street here in London, and joins us now. Arjun, from Paris, now getting into London and into these headsets. Expectations then, would it be the same reception as the US, possibly?
Yeah, I think so, Arabella. Look, there's a few, I think, issues with the Vision Pro at the moment in terms of this being a mass market product. The first one is the price tag, $3,500 for this headset, which there are still questions over what exactly people are going to be using for. There's still limited applications at this point. This is likely going to be a very early adopter kind of product, those tech enthusiasts with a spare $3,500 lying about. IDC are expecting this product to sell about 400,000 units alone this year, so bringing in about $1.4 billion of revenue. Now, if you think the big question that investors are asking is this going to be the next iPhone? You think about iPhone sales in the March quarter alone were 46 billion, so clearly not right now. But what this is a big bet from Apple and from Tim Cook. Tim Cook said the Mac has ushered in the world of personal computing, the iPhone ushered in the world of mobile computing, and the Vision Pro will usher in the world of what he calls spatial computing. That's the hope, at least, as it goes on sale today in the UK, Australia, Canada, France, and Germany. And this spatial computing term Tim Cook and Apple have been using refers to this merging of the virtual and physical worlds that the Vision Pro brings. But again, lots of questions over the price tag, over the use case at this point, and clearly it's not going to be a mass market product. One of the interesting things I think investors will be looking at is whether the rumors of a cheaper version of the Apple Vision Pro will be true, will come out. If so, that could help Apple bring this into a broader user base to compete with some of those products from other companies like Meta, for example. So that's going to be a big question. But right now, I think for the Apple story, it's still about the iPhone, but this is a big part potentially of Apple's future going forward. Back to you guys.
Yeah, Arjun, will certainly be looking out for that story. And with the Vision Pro, of course, headsets available in Europe for the first time today, customers have indeed booked in-store demos to check out the new piece of kit. But would you part with $3,500 for it? Check out CNBC.com for more.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.